Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today I'm going to go over peak oil. And again, I don't know if it's peaking anytime soon. It very well could be. And that could be what's causing this energy crisis is a peak in oil and a peak in other energy sources like natural gas and putting everything into an energy supply crunch. Now, I'm going to talk a little bit about the ramifications of it. What does an energy crisis look like? What is it going to do? Now, in the upper left here, I've got peak oil and peak net energy. Oil is in the blue. The blue right here is the oil volume flow. But the net energy to society is really what's important, which is in the gray. And if the gray peaked and is heading lower, which it very well could have, because we are not investing in oil, and we're going after lower and lower oil grades, and that's quite obvious with tar sands, shale oil, deep sea drilling. We're going after stuff that is not easy to get. And the energy return on investment, which means if I sink 1 barrel of oil into it, how many barrels am I getting back? That is declining quite rapidly over time, which means that we could potentially be very close or have already hit net energy from oil. And net energy, you're going to see, I think, ramifications from that, where companies, if they have contracts or set prices and they have to provide some sort of whatever it is, you'll start to see bankruptcies because your input costs go skyrocketing and your output that you're selling it for is fixed. And you're going to see companies go bankrupt from increasing energy prices. And we're seeing that happen in Europe. We're seeing it happen, I think, in Asia. And the entire system is predicated off of growth. And any sort of debt, currencies are debt, bonds are debt, and then you've got the entire stock markets. The entire stock markets are everything looking forward. And what you're doing is they're projecting growth in the future. And what is happening is I don't think people are pricing the cost of energy or we'll call it if energy is even going to be there in the quantities that they want. So there could be a large mispricing of energy in the future. And what that's going to do is it's going to price assets differently when not only prices of energy go up, but the abundancy and scarcity of energy may hit it even worse. So we know that we're getting lower returns, energy return on investment on our energy. Now, renewables are not renewable, they're replaceables. We obviously gather it from renewable source, but the energy return on investment on wind and solar is far lower and far more intermittent than fossil fuels. Fossil fuels are by far the preferred method to get energy from because it's reliable. You can store it very easily. You can store natural gas, you can store crude oil, you can store coal. You just put it there. And there are high energy returns on investment fuel types. And that's what's needed for an advanced civilization, a complex civilization. And I'm going to step through some information here. I already covered peak oil kind of, but the net energy to society is what's important. And I don't see how we could go through and build massive amounts of solar and wind and then have the ability to have those self-sustaining, where we're going to continually grind out minerals from the earth nonstop for the replacement and for the growth of solar and wind. I mean, people just think that these things are just going to come out of nowhere, but they're probably going to want more copper than what we've got in the ground, even just for the energy. Now, keep in mind, everything is predicated off of growth. Growth. That means that if we're going to replace oil, that we have to replace absolutely everything, and we have to put more in to grow it. And then you're going to have to get in this loop where you're going to be continually growing it forever and replacing whatever goes and needs replacement. So you're going to be mining like no other. It's going to be a constant recycling and growing of those minerals to replace our energy source. And if it's a low energy return on investment, everyone's just going to be going and being employed in gathering energy and building these things. So let's go over this. I'll give you my financial opinion. And here we go. This is peak oil. I already kind of covered this, and this is the energy return that's declining. We've been on this cliff here because we're going after lower and lower returns of energy return on investment. Now I've got here the copper intensity of renewable energy. We've got solar, onshore wind, and offshore. And the amount of copper needed, the copper content per megawatt, is massive. We've got 5 tons for solar, 3.4 tons for wind farms, and a whole bunch, maybe like 10 tons for offshore. And you can see over time that copper demand from annual solar PV installations could more than double by 2030. And they just keep ramping up as we use more and more of those renewables. And copper and cobalt and rare earth metals, I don't think we have enough to actually grow as much as we want to. Now, on the right-hand side, I've got historical and projected copper production in million tons. And you can see that these things are growing quite rapidly. We are at 2020, so we're actually over here. And we are very close to what some are thinking is a peak in copper over the next 8-9 years. And then we'll decline. So it's going to be very interesting to see what copper production looks like and if this peak is accurate at about 2030-ish. So we could peak in copper and none of this over here will manifest itself the way that people think. It's a risk that we can't flow copper at the rates that the renewables want and that these governments want. And governments think you can just change this stuff so rapidly and easily. I just don't think so. Now, historically, copper ore grades have been declining quite rapidly. And I've got a cumulative energy demand versus ore grade. And right now we are entering where this kind of greenish bluish line is right here, where we're going to go vertical on the energy input costs for copper. And it's not just costs. You hit a point where just the ore grades are so low that it doesn't make sense to take it out of the ground, no matter what the costs are, because the energy input is so astronomical that you'd be better off just using that energy directly and conserving it versus dumping it all into getting copper. But we'll see. This is the energy input line, so to speak. This line, as you grow a large project, it drops a little bit. As you mechanize it, it goes up. You've got the exhaustion and increasing supply, which goes to the left hand. That's your ore grades declining. And then you have technology improvement that drops it a little bit. But notice that no matter what you do, you're going to hit a hockey sticking point where your energy input costs go up no matter what. So even if you lower the scale a little bit, as long as your ore grades are moving to the left, you're going to see higher and higher energy input. And that's what we have here. Now, these charts are from a report back in 2014, so they're pretty old. And what I want you to look at is just look at the grades and the energy consumption. So if the grades are really thick in gold here, if they're all piled on the left-hand side where they're not getting much gold in terms of grades, their energy is increasing. And what we're seeing is we're going after lower and lower ore grades, which means that your energy consumption is ramping up the curve. And you can see even on zinc, as zinc goes down, we're coming on up, and most of the new sources of metals are much lower ore grades than in history. Here's copper ore grade. We're going after 0.3%. We are going after stuff that's over here, and you can see that they're starting to populate. They're starting to populate this graph and chart on the left-hand side, and it's mainly all over here, which requires a lot more energy consumption. And that is true for all of these. What is happening is we're moving further to the left with lower and lower ore grades, and as your energy consumption is increasing on absolutely every single commodity that gets mined out of the ground. So as energy becomes a lot more scarce, your minerals that you need are going to become increasingly expensive because your input costs are making up a larger percentage of your cost in a cost curve for mining. And I know everyone thinks that technology can save it, but I would say it's almost the opposite. Technology has allowed individuals to afford many more things in life. More people can buy cars, more people can buy electronics, more people can buy computers and monitors, and it's allowed people to extract minerals faster. And I don't know if that's necessarily a good thing, because as we extract at faster and faster rates and become more efficient at extracting, all you're doing is you're just taking everything out of the earth at a faster rate until we can't. And that when that day comes when we can't, and these energy input costs go skyrocketing, your cost curves will skyrocket. And you're gonna be put in a situation where we'll have mineral scarcity because of energy scarcity. Here is another graph here, chart. It says total energy. This is 03 to 2013, and this is your tons of copper. Notice your tons of copper is basically moving up at a lower rate than your rate of total energy. That's why the gap is getting larger and larger between these. What that means is that you're sinking a bunch more energy into it and getting less out of it. That's exactly what we're seeing in the charts where we're going after lower and lower ore grades. You have to sink copious amounts of energy in to get the same back out. And maybe even in the future, you get less out, dumping twice as much energy in. Now, if you're in a massive energy crunch, and your energy input costs are skyrocketing, that means the entire cost curve of anything that you have in those metals is increasing. What this is going to do is you're going to have this funky scenario where the cost, I think, in my opinion, the cost of energy is going to remain elevated. I don't think it's going to go back down. Our replacements, if you notice in a lot of these different countries that have renewables, are not cheaper. They're more expensive. So as energy costs increase throughout the world, and if energy becomes a lot more scarce, which we're seeing, and I don't know if this is the beginning of a trend or if it's a fluke. I think it's a beginning of a trend because it started in Asia in 2019. It's starting to spread into Europe, into Russia, into all of these different countries, and it's even starting to spread here in the United States, and it's like it's spreading absolutely everywhere. And if that's a trend where it's going to continue for many, many years, we may see vastly higher energy costs and scarcity. What does the pricing of assets look like in that world? It would mean that energy investments are probably the best, and people are not investing in fossil fuel energies. They're still not investing in it, and that has been our proven energy source. It's been our high energy return on investment source, and it's like they just want to cut it and go straight to renewables. The problem is, I don't think renewables are building renewables. Everything in this world is basically built off of oil. And you're cutting your oil source, which means that you're cutting your growth source. If everything's predicated off of growth, and all growth is predicated off of energy, all you can say is if you have to grow an economy, and economies have to grow for their money systems to stay alive, for their budgets to work, for all of these things to work, for the stock market to work, and you cut your energy source, well, you just cut your GDP. You cut your growth, because your growth can only grow as fast as your energy sources can. And we're getting in a weird situation where I think that everything's going to go short because these metal prices have to skyrocket to keep up with the cost of the energy input costs, which means that something like a platinum or a gold or silver are probably very good investments in the physical format, because when energy goes scarce, it's going to be really hard to get these things out of the ground, because there's between you and the metal in the ground, at whatever ore grade it is, energy is the only thing that will unlock that metal out of the ground. Because you got to pick it up, you got to move it, and then you got to sift it out. And that takes a whole bunch of energy. So I think that if we were to hit problems with energy, that the metal prices would all skyrocket. Doesn't mean that the mining companies are necessarily going to make more money, because their energy input costs are skyrocketing and their grade levels are declining. So when I look at this, I would say that around the world with energy scarcity, we could see we could see crash, go back up, crash, go back up, where we're trying to grow economies, but the energy availability is a barrier to that growth. And I don't know if this is necessarily going to be true, guys. I'm just speaking in general, kind of off the top of my head, because I've thought about this quite a bit back in the mid 2000s with peak oil and all those guys, and I don't know. I mean, maybe it's coming, maybe it's not. I hope it's not. I really hope this isn't, because I mean, we're going to see astronomical high prices of absolutely everything. A lot of people think in prices, but the next world could be priced in barrels of oil or energy units, saying, well, how many energy units is this going to consume? Because dollars, the world is constrained by physics, and physics is an energy transaction, basically. Dollars is just, you're going to get to a point where it doesn't matter what the dollars are. Dollars are not energy units per se. And if your energy becomes scarce, then everything that's in your hands that has incredible value to humans becomes infinitely valuable. Maybe that's silver, maybe that's platinum, maybe it's gold, depends what the uses are. But you can't be invested in things that have ever increasing debt, because that's a future repayment in energy. And if your energy goes scarce, or if you just don't have it, then you can't ever repay it back. If you can't ever repay it back, things start to collapse. So I don't know. I'm just throwing this out there as a thought experiment. I'm not saying that the entire economy is going to crash because of energy inputs. I think we're just going to get very expensive on our energy inputs, and that's going to impact the price of absolutely everything. And at some point in the future, and I don't know when that is, things will be looked at differently and probably repriced based off of expensive energy versus cheap energy. Which means anything that is incredibly energy intense would not be very valuable in a high energy availability, low cost area. That we could acquire this, where if energy becomes incredibly expensive and scarce, these high energy sunk costs in a low energy and cost environment will go up increasingly expensive in the future. And I would think that that would be something on the lines of like a platinum, which is incredibly energy intensive to get. It's one of the most energy intensive things. So that held in your hand and out of the ground and refined is going to be incredibly valuable, versus something that you're investing in and you're subject to the risk of increasing energy costs. which would drive the value of that down. So it's just another aspect to look at is what are your investments? Is it something that requires energy to be priced low in the future? And if your energy prices were to rapidly rise, what impact would that put on your investments? In physical precious metals, I think they would all go up, not down. In stocks, in bonds, in currencies, all those things, I think they would drastically drop. And in Bitcoin, that's an energy that uses energy, copious amounts of energy to do transactions. So that may go down. I don't know. So just a thought experiment, throwing that out there. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.